Hi everyone, in today's video we're going to discuss Chapter 7 of The Intelligent Investor. If you want to support the channel, I suggest you hit the subscribe button and you like the video. If you want to purchase The Intelligent Investor, I will drop a link in the description below where you can purchase the book. And if you want to trade yourself, then I'm going to drop a link in the description below to sign up to Robinhood, which is a platform that allows you to trade commission-free. Without further ado, let's start discussing Chapter 7 of The Intelligent Investor. In Chapter 7 of The Intelligent Investor, Benjamin Graham discusses the positive side of the portfolio policy for the enterprising investor. What this means is that Benjamin Graham starts discussing the things that the enterprising investor should do in order to build his portfolio. In Chapter 6, we have seen the types of investments that the enterprising investor should not choose because they mostly lack safety. As we said in the first video of this series, the enterprising investor, by definition, will need to devote a fair amount of time and attention to obtain a better than average result. We briefly discussed why the enterprising investor shouldn't invest in growth stocks. In this chapter, Benjamin Graham analyzes more into detail the reasons for such choice. First of all, what is a growth stock? A growth stock is a stock that achieved better than average results in the past and is expected to continue to perform similarly in the future. If such a stock achieves better than average results in the past, this of course is a good indication that will continue to do so in the future. So why not buying this kind of stocks? So the reasons are two. The first problem is that they are generally sold at high prices, so they are generally overvalued. The second reason is that unusually rapid growth cannot keep up forever, and sometimes even if the company continues to grow, even slowing down on its growth will mean that the price will decrease. So we can see the price decreasing even though the company is growing, just not growing at an unusually rapid pace. So let's draw some conclusion from this first slide. The aggressive investor should invest in stocks that have a trading PE ratio with the average earnings over the past 7 years below 25 to 30. Otherwise, this would compromise the safety of the investment. Now, let's analyze different types of strategies that can be used by the enterprising investor. So the first one is related to relatively unpopular large companies. Very often, large companies are undervalued because of either unsatisfactory developments of a temporary nature or because of a decline in the general market. So there are a couple of advantages in investing in such companies. The advantages are, number one, that these kind of companies have the resources to carry on through adversity. So if there is a temporary unsatisfactory development, these kind of companies have the resources to carry on through. Another advantage is that the market is generally very responsive to any improvement shown. So these kind of companies might be a safe and interesting kind of investment for the enterprising investor. A second type of investment are the bargain issues. So let's start by giving a definition of bargain issue. A bargain issue is an issue that, on the basis of thorough analysis, appears to be worth considerably more than it is selling for. To be more precise, Benjamin Graham considers a bargain issue one that is selling for 33% less than its actual price. The reasons for this unpopularity might be currently disappointing results, protracted neglect or unpopularity, or the market's failure to recognize its true earnings picture. Whatever the reason may be, there are a couple of ways to detect bargain issues. The first one is also called the method of appraisal. This is based on future earnings which are multiplied by a factor that is appropriate to the particular issue. The second way to detect these companies is also called the method of the private owner, also known as net-net investment. The way it works is by considering the net working capital alone. So the net working capital is the capital derived by the current assets, such as cash, marketable securities, inventories, and so on. Cash and cash equivalents are taken for full value. Accounts receivable are adjusted because if there are accounts receivable and you don't know whether the company will be able to be paid on such accounts, they should be adjusted. Generally, also the inventory is discounted at its selling price, generally around 50%. After calculating the current assets this way, you have to subtract the total liabilities, included preferred stocks, and long-term debt. I'm gonna drop a link in the description below of Investopedia that provides a very accurate description of what net investment is. It's an interesting strategy that allows you, according to Benjamin Graham, to detect a lot of companies that might be of interest. If the net working capital, calculated the way I explained, is more than the market capitalization of the stock, this means that we have a bargain issue. Finally, another type of bargain issue is the bargain issue in the secondary market. Secondary companies can be defined as companies that are not leader in a very important industry. We are talking generally of one of the smaller concerns in its field, or a leader but in an unimportant line. By way of exception, any company that has established itself as a growth stock is not ordinarily considered secondary. Experience has always taught Benjamin Graham and security analysts that these kind of companies are often undervalued. If that is the case, investing in such issues might give considerable profits. So let's see what kind of profits we can obtain by investing in such companies. So generally they pay high dividend return, and the reinvested earnings are substantial in relation to the price paid, and this will eventually affect the price. Number 3, a bull market is ordinarily most generous to low price issues. Thus, it tends to raise the typical bargain issue to at least a reasonable level. But even if it's not a bull market, many times there is a continuous process of price adjustment that might increase the price. A fifth reason might be that the specific factor that affected the record of earnings that was negative in the past might disappear. So after thorough analysis, if you think that a specific factor might disappear in the future, and therefore that the record of earnings was negative just because of a temporary situation, this might be a bargain issue. Number 6, and this is particularly true for companies that are leaders in unimportant lines, the acquisition of the secondary company by a larger one that is trying to diversify its investments. And last but not least, another type of investment for the enterprising investor is the special situation. So there are a couple of special situations that are discussed by Benjamin Graham. The first one are the acquisitions. So many companies have tried to diversify, and instead of starting a new company in a different industry, they have preferred to buy an existing company in another industry. Such corporate moves have been producing interesting profit-making opportunities for those who have made a study of this field. Another situation are the legal proceedings. So the underlying factor here is the tendency of the security market to undervalue issues that are involved in any sort of complicated legal proceeding. To be honest, there is an old Wall Street motto that has been never buy into a lawsuit. This may be sound advice to the speculator seeking quick action on his holdings, but the adoption of this attitude by the general public is bound to create bargain opportunities because the prejudice against this kind of stocks holds their prices down to reasonable levels. In many situations, the exploitation of this special situation can provide interesting profits. Right, so thank you for watching. If you liked the video, don't forget to subscribe and like the video. I will drop a link in the description below if you want to purchase the book or my microphone. And if you want to trade yourself, then I'm going to drop a link in the description below to sign up to Robinhood. Thank you for watching, and bye everyone.